So the first thing we have to do is we have to take a look at why they're saying we're having a banking crisis. Number one, that we've heard a lot about, this has been the primary notion, that bank deposits are down. The banking deposits are down. People aren't depositing enough money into the bank because interest rates are better elsewhere. So since the Fed has been lifting interest rates, bank deposits are down. But I have a question. Down from where? Where are bank deposits down? They're down year over year. Why are they down year over year? Well, the government isn't giving out trillions of dollars in aid for COVID anymore. Where do you think those trillions of dollars went first? They went to banks. So if you had 1.5 trillion, which was simply the bailout, there was far more money than that spent on the COVID pandemic. Far more money. So if you take 1.5 trillion, we'll just use that number because it's factual and no one can argue with it. You give it to large corporations and individuals, and they're putting that into their bank, which is what people do with their money, and you stop giving them money, what is going to happen to the level of deposits? They are going to plummet. Wow. No one's talking about that. I haven't heard mention of that once anywhere. Why? It doesn't serve the narrative. We are in a clickbait generation. Social media is copy and paste each other. Copy and paste each other. You can find good people out there. There's no doubt about it. I found some on Twitter that I will retweet their stuff and add a comment to it. But the fact is they'll say something original. But 95% of it isn't original. So it's real difficult to find good information. But I'll tell you this. No one's talking about the fact that there was a bunch of money given to a bunch of corporations and a bunch of people. And now there's not. So deposits are down. So that's the first thing. So obviously we can all agree that deposits year over year should be annihilated. This is not an issue, right? All right. Number two, an inverted yield curve. And that's financial jargon. Financial people like to speak in jargon as to confuse you and make it sound complicated. It's not complicated. Typically, 1-year interest rates are far less than 30-year interest rates, period. You borrow money for 1 year, you pay a heck of a lot less than if you borrow money for 30 years. As long as it's like an SBA loan or something and not one of those criminal funding company loans. That, by the way, if you were getting working capital as a business owner, that's criminal. And I have a whole video on that, and you should go watch it if you are a small business and you're ever considering taking money like that. But it's real simple. The shorter term you borrow on, the cheaper the money is. Well, what's gone on here recently is with Powell jacking up interest rates as fast as humanly possible, which, by the way, is an intelligent decision as long as he yanks those interest rates back down as quickly as they went up whenever he sees the economy start to get into trouble. Remember, the goal of interest rates being increased is to hurt your pocketbook, make your ability to spend almost nothing. Once he hits that, so that we don't head into a depression, all he has to do is yank rates down as quickly as he pulled them up. He'll correct the inverted yield curve. So once again, if you borrow for 1 year, it'll be cheaper than borrowing for 30 years. The economy won't have any problems. It should be a relatively smooth landing. It looks like Powell's going to do that. I don't want to get off subject here. I do have an inflation video too. Feel free to go check that out. I talk a lot about the inverted yield curve. Just not boring. I mean, layman's terms. So the bottom line is this: how do banks make money? Well, you deposit money into a bank. We just discussed how they're getting less deposits and why they're really getting less deposits right now. So that's why they're getting less deposits. And so they don't have as much money to go and borrow. Furthermore, right now, when they say inverted yield curve, what that really means is it's actually more expensive to borrow in the shorter term than it is the longer term. So if a bank makes money by taking in your deposit and then lending, say they have to borrow from the Fed at 3%, and they're lending money out 30 years at 6%, that 3% spread, so they're borrowing for 3, they're lending for 6, that 3% spread, that's their profit. So if you eliminate that profit, so let's just say they're borrowing that, and there's costs associated, obviously. So if they're borrowing at 5.5 and they're lending at 6, there's no money to be made. Now, couple that with the fact that no one's depositing money because they're not getting free money from the government, or it looks as though no one's depositing money because there's not as much free money. The banks have a real problem, but it is a self-created crisis. This was obviously going to happen. Nothing I've said is anything that anyone that didn't go to Finance 101 doesn't know. Like nobody. The Reserve Bank, the Federal Reserve Bank, so I read some, they're saying they made a wrong bet on interest rates. No, they didn't. This is not something that you didn't know was coming. Powell told us, all of us, a year ago, if you were sitting in instruments betting on rates to fall, I don't know what's wrong with you. That's ridiculous. So to say that they got it wrong is ridiculous. So sadly, is this actually a banking crisis at all? I mean, given the fact you knew exactly what was going to happen, we all did. This isn't Monday morning quarterbacking. They told you. We're taking rates to 6% in the coming year at least, potentially more. The only thing that we don't know right now is when are they going to start pulling rates back down? We don't know that yet. But to say that you're Monday morning quarterbacking when rates went up, no, you're not. And I know that your real estate agent friends and other people want to tell you that because they didn't pay attention to the market. And the truth is they probably don't know the market. Most people that broker deals, they don't know much about the market that they work within. There are some. There's always those that are excellent at what they do, and they know exactly what they're talking about. And if you had an agent like that, you didn't buy because they told you not to, intelligently. In fact, if you own something, they told you to sell and rent. So if you had an agent that did that for you, I'm not talking about him. That person obviously knows their market, pays attention to the economy, and does a very good job, and I'm sure does very well for themselves. There's a lot of guys out there that do well for themselves too by simply getting you to buy. The fear of missing out. That's what they sell all day, the fear of missing out. And then when something like this happens, nobody saw it coming. Nobody saw it coming when everybody saw it coming. Even little old me who knows nothing. I've been in finance for 25 years, but I don't work at a top bank. I used to work for Merrill Lynch. I used to work for Wells Fargo Advisors. That stuff's all, forget that stuff, right? And I'm talking about at the retail brokerage level. I was a wealth advisor for over 20 years, 10 of those years out on my own. The other 10 of those years I worked for firms like that. But I actually cared how markets work. I cared to know what was going on. So this banking crisis, I hate to be the bearer of bad news, but it looks to me like the Federal Reserve Bank, SVP, they're in on it. I mean, what else? What other conclusion do you come to other than they knew this was coming? They did nothing to get out of the way, and they had no problem. JP Morgan just came in, whoop, scooped them up, owns them now. So now here we are again. We all learned in 2008 and 2009, for those of us that were there, those banks were too big to fail. Well, guess what? All we've been doing is making them bigger. That's it. I have an entire series on the Great Reset and what I really think it means. And what I'll tell you is this: there appears to be a push and pull between those that want to completely centralize everything and those that want to completely decentralize everything. They are on the fringe. I think those that are intelligent realize it lies somewhere in the middle. But this idea of making these banks bigger and bigger and bigger, you are just putting the power and all of the power into the hands of very few, which affects our political process. It affects everything. So this crisis, sadly, I don't believe it's a crisis at all. And for those of you that follow me or pay any attention to me, you kind of know my stance on this stuff. So I'm here to say that I don't believe this is a crisis. And I won't write about it as though it's a crisis. And I won't comment about it as though it's a crisis. The government quit giving away trillions of dollars, so deposits dropped. The Fed increased interest rates, which we've known about for a year, so banks can't make as much money. Now you have all these guys saying Warren Buffett and Charlie Munger, they don't believe in banking. That's why they're not buying banks. No, they're investors. They believe that there's better money to be made elsewhere right now. And that's because the banking sector is in a transition. The banking sector is in a transition where it's run by very few, and now they have competitors nipping at their heels. Now they're going to buy them up and create crisis and do whatever they can to keep banking in the hands of the few. So Charlie Munger and Warren Buffett are just being intelligent. They know that there's better place to put their money, and they're putting their money there. Any questions, comments, ask them below. I'd love to answer them. If somebody has different insight on this and you want to get together and make a video about it, or have some sort of a call about it, I'm into it. Again, thanks for watching. Click subscribe. I don't know. You know what to do. Look, I don't know. Do what you do. I hope you enjoyed this. And maybe this is something you haven't heard before.